Hi everyone. Today I'm going to share top 5 tax deductions that every doctor should know. You take care of your patients. Let's make sure your money is taking care of you. In this quick breakdown, I will walk you through the top 5 tax deductions for doctors in 2026 that can save you tens of thousands of dollars if you use them right. Whether you are W-2 employed, 1099 or a practice owner, these are the levers that really moves the needle on your tax bill. Number one is retirement plan contributions. Your retirement plan is your single biggest legal tax shelter. As W-2 employees, you can max out the limit of 401k or 403b employee deferral limit, which is in the mid of 20k range, plus catch up if you are 50 plus. For 1099 or practice owners, consider a solo 401k or defined benefit plan. Total contribution limits can jump into 70k plus range. Every dollar that you defer into a qualified plan is a dollar that's not being taxed today. Ask your CPA which retirement plan fits your income. W-2, 1099, and practice ownership all play by different rules. Number two is health savings account, HSA contributions. HSAs are triple tax advantaged. It's deductible going in, tax-free growth, tax-free withdrawals for qualified medical expenses. For 2026, family HSA limit in a high 8K range with extra catch-up for those who are 55 plus. It works best if you are on a high deductible health plan and can afford to let your HSA grow without spending it immediately. Think of your HSA as a retirement account that is dedicated to your future healthcare costs. Number three is self-employed health insurance premiums for 1099 doctors. If you have Schedule C or 1099 income, you may be able to deduct 100% of your health insurance premiums for yourself, your spouse, and dependents. That is above the line deduction, which directly reduces your AGR. This includes medical, dental, and long-term care premiums subject to IRS rules. You generally can take the deductions if you are eligible for employer subsidized coverage through a W-2 job. Even a small moonlighting gig can unlock powerful self-employed health insurance deductions. Number four is business expenses for 1099 or practice owner physicians. For W-2 doctors, after recent law changes, unreimbursed employee expenses like scrubs, CME, or licensing fees are no longer deductible at the federal level. For 1099 or practice owners, it's a different universe. These costs become business deductions on Schedule C or at the entity level. Malpractice insurance, CME and conferences, licensing and board fees, professional dues, home office tied to administrative work, business use of vehicle for practice-related travel. These reduce taxable business income, which can compound with other deductions. If you are 1099 or own a practice, every legitimate business expense is a tool to lower your tax bill. Number five is qualified business income, QBI deduction, section 199A. For many practice owners and certain independent physicians, the QBI deductions can be worth up to 20% of qualified business income, subject to income thresholds and entity structure. This typically applies to income from an S Corp, LLC, or sole proprietorship, not W-2 wages. High income physicians may face phase outs and special rules, So planning with an advisor is crucial. QBI is one of the most powerful but most misunderstood deductions available to medical professionals. If you are a doctor and your tax life is not one size fits all, your employment structure like W-2, 1099 or practice owner determines which deductions you can actually use. And the difference can easily be five figures a year in taxes. Reach out Redland Tax Solution for professional help. I'll be happy to help. 903 686 2211 910 West Front Street, Tyler, Texas.